Welcome to the SaleAway podcast. My name is Trey, and today I'm joined with Jake and Zach, who are both co-founders and brokers as well. If you're an online business owner or an aspiring online business owner, this is the podcast for you. This episode will be part 2 of our 10-part series, How to Sell an Online Business. It is more important to follow this series step by step so you can successfully sell your online business. The episode before this, we went over when is the right time to sell your online business and how to value your online business. If you haven't listened to part 1 of this series, make sure to go back, give it a listen before moving on to part 2. In this episode, we will be going into a little background of finance as well as the importance of having up-to-date financials. So now I'll just go ahead and pass it over to Zach so he can go over 3 important financial statements.
All right, so we're going to touch on these much more in depth here shortly, but just wanted to give a brief overview of the 3 financial statements that we are going to be discussing here today and the importance of each one. So first off, we've got the income statement, also commonly referred to as the profit and loss statement or just P&L statement, earnings statement, revenue statement. They're all kind of interchangeable words or terms for an income statement. And this will show the business's revenues, expenses, and profits during a particular period. And it is the most important one typically for online businesses and the one that we're going to touch on the most here. And then we'll also give a brief overview of balance sheets, which are a statement showing the company's assets, liabilities, and capital at a given point in time. Typically quarterly or annually would be common for that. And those aren't too common for online businesses, but we will discuss a few situations where a balance sheet may make sense to provide. And then pretty much the same deal with the statement of cash flows or the cash flow statement, not something too important for or too common for online businesses, but it is like an income statement in that it records an online business's performance over a specific period of time. So again, not very common, but we'll give a few examples of where that may be important or where that may come into play. So I'll pass it back over to Trey here just to kind of get us started and begin discussing the importance and why it is so critical that you do get these financials put together in order to go out and sell your online business.
Yeah, and financials is definitely one of the most important things when it does come the time to sell your website. We've had multiple instances of companies that come into this process that either A, don't have any financials at all. So really they're just bringing in money and don't really know where it's going, how much they're bringing in, or they just have some financials that may not be up to standard or as far as accurate as they should be. And so with that, we really just want to stress on having these financials really just be accurate, track them every single month. The reason being is because once it does come towards that selling time, it just becomes a lot easier to have those accessible and really just showing the buyer that you have up-to-date account financials for those.
Yeah, all great points there, and just wanted to touch on one other thing. Once you do actually have your business listed, ready to sell, it is important when you're tracking those monthly income statements that you do have them ready, ideally within the first few days of the next month. That way, when people are reaching out, interested in potentially buying the business, you can provide those financials almost instantly once a given month ends, rather than keeping them all on hold and making them wait for 2 or 3 weeks. They may lose interest if you don't have those financials prepared and ready to go right at that moment.
All right, guys. So I'm going to go ahead and jump into the income statement in more depth. But before we do that, just wanted to touch on a specific example that ties in with what Trey and Zach just said. So we'd been working with a client who had a relatively large business. We had it listed for approximately $750,000. The owner only put together financials on an annual basis. And so he had them put together by a CPA firm. They were completely legitimate, totally professional, awesome financials, but they were only put together on an annual basis. And we were trying to sell this in the back half of 2019. And every buyer's question was, well, what does 2019 profitability look like? Can you send me monthly financials? And we didn't have any of that. And so we just had to, have a conversation with the owner, try to get monthly financials, but he wasn't willing to spend the money to do it. And he just kept telling us, well, it's just as profitable as it was last year, if not more profitable. So just go ahead and assume whatever the profit margin was as 2018 is accurate for 2019. And so we were operating off of this assumption that, 2019 was better, or at least in line with what 2018 was. Finally, I guess first we got a full asking price offer at $750,000 based off of 2018 profitability of about $420,000. Come end of 2019, we get the 2019 financials put together, and profitability fell down to below $150,000, even though revenue had increased. And so we were operating off of, and so was the buyer who put in the full price offer, we were operating off of, okay, higher revenues must mean higher profits for 2019. And ultimately that wasn't the case. And so, where that process stands now is, the business owner isn't willing to sell because the valuation of his business dropped significantly, and the trends that the financials are showing really just cut his business value, down to a third or so. All right, so kind of digging in more on the income statement, I assume most of the people listening have a kind of general idea of what an income statement does, but at a high level, you've got your revenues, you've got your cost of goods sold, which gets you to gross profit, and then you have all of your operating expenses, which should get you down to an operating income number. A couple important things that I want to point out on the income statement is, one, what any buyer should be looking at here is going to be your earnings before any interest expenses, before any taxes, and then also with depreciation and amortization pulled out. And so that's technically what we call EBITDA. Also, we refer to that sort of as seller's discretionary earnings in the online business space. But you want to look at it, prior to any taxes being paid or prior to any interest expense, because those are, one, the tax piece is dependent upon who the owner is. And so I might be in a different tax bracket than you are. And so I can't assume that your taxes are going to be the same as my taxes. With interest expense, whether you put debt on the business is a personal choice. And so you don't want to assume that there's going to be debt on the business. And if you do have it on there, it's going to lower your profit number that you're selling off of. And so you're going to get a lower valuation. And then with depreciation and any amortization, if you have it, it's a non-cash expense. And so you always want to add that back, since it's not a true cash hit to the business. So in addition to that, another thing I want to touch on is cash accounting versus accrual accounting. Cash accounting is where you're expensing everything whenever the money leaves your bank account. And so, for example, if you buy $50,000 of inventory, even though it might take you 6 months to sell all of that inventory, you're expensing that $50,000 on day one whenever the money leaves your account. With accrual accounting, what you're doing is you're matching your expenses to when the revenue is generated. And so if you bought $50,000 of inventory and you sold 10,000 of it in month one, you're only going to be expensing $10,000 of cost of goods sold for that month. And so you're only recognizing the expense when you recognize the revenue associated with the product that you're selling. This is extremely important to understand both as a buyer and as a seller, because it can cause huge swings in the financials of any business that has, significant inventory purchases or prepays for things up front. And so, if you're expensing all of your inventory, but it's taking you 6 months to sell it, whenever you buy the inventory, you're going to have a huge negative month. And then all of the months after that are going to be extremely positive. And so that's going to make your, your monthly financials look like a mountain, going up and down, up and down. And really what we want to show is smooth and consistent profits. And so I'd say it's better to have your financials on an accrual basis, if possible. And then kind of third thing to touch on is add backs. And so anytime you're trying to show a potential buyer what the profitability of your business is, you want to add back any expenses that a new buyer wouldn't have to, or that a new buyer could forego once they take over the business. A lot of people that run kind of personal small businesses, you're going to expense things like your cell phone bill, you're going to expense your rent or a portion of your rent, maybe, car mileage, your gas, etc., some meals and entertainment, dinners and things like that. There's a lot of things you can get away with expensing to your business to reduce your taxable income, but you don't want those to be on your income statement whenever you're selling your business to someone else, because a lot of times someone who's buying the business already has a phone bill that they're paying for. They already have a car that they're paying for. And because they're not necessary to operate the business, you don't want to be losing money because that's factored into your financials. And so there are things that we call add backs. So typical things to add back are some of those that I just mentioned, your phone bill, rent expense, car expenses. Another big one is your salary. And so what we want to show as a new buyer is if you buy this business, here's how much money you're going to put in your pocket. And so if you have a salary, that's going to essentially be netted out of your net profit. And you want to go ahead and add that number back so you can show a new buyer, here's how much financial benefit you're going to get when you buy your business. So that was a lot there. Just to kind of touch on that, accrual accounting is the kind of preferred methodology. If you have it in cash accounting, it's I don't want to say relatively simple, but it can be transferred over to accrual accounting, and a broker can help put you in touch with someone who can do that for you. Add backs, you definitely want to make sure you're taking advantage of every add back that you can. So I'd recommend consulting with someone who understands what add backs are acceptable and what aren't. And then the last thing that I'd say is you really want at least 2 years of income statements. More than that is better, but 2 years I would say at a minimum, and they really have to be on a monthly basis. If they're not on a monthly basis, you're going to have a really hard time getting anyone to believe what you tell them your profitability is. And so they need to be monthly. If you only have them annually, have your accountant or whoever it is go back and put them in monthly format, because that's extremely important as people look at the trends. So a lot there on the income statement. Always happy to answer any specific questions that I might have caused or brought up by that a little more in-depth explanation there. But anyways, going to go ahead and pass it over to Zach to talk about the balance sheet.
All right, thanks for that in-depth explanation there, Jake. And yeah, coming back to the balance sheet here, as we mentioned early on, it's really not a frequently needed or required financial statement when it comes to a lot of online businesses. However, it's definitely something to consider keeping and providing to any potential buyers if the business does have considerable assets and or liabilities. If it's just one of these things, honestly, you probably don't need to put together an entire balance sheet for that. It would just be important to let the buyers know, hey, this comes with a few $1,000 liability, or maybe you sold gift cards on the website and there's still $10,000 in gift cards outstanding. It would be important to let them know that piece of information, but you may not necessarily need to put together a balance sheet just for that one item. However, if you do have a combination of assets such as accounts receivable, inventory, supplies, property, plant, and equipment that you will be selling with the business, something to consider. And then same goes for liabilities with accounts payable, unearned revenue, any debt, loans, any long-term liabilities. If you do have a combination of those assets and liabilities, really definitely consider putting together a balance sheet and providing that. But again, really not something that's going to be required for most online businesses, as not many really have that many assets or liabilities that will actually be sold with the business or with the website in question. So that's really all I have on that. I don't know if there's much more info to add there. So unless Jake has anything, we'll pass it back to him to touch on the statement of cash flows here too.
No, I think that covers it for the balance sheet there. So I'm going to go ahead and touch on the statement of cash flows, and I promise I'll try to keep it brief this time. So statement of cash flows is probably not a very frequent financial statement to see with online businesses. You should have something like this if you have your financials in QuickBooks. QuickBooks or Zoho or any of those types of accounting systems should be able to create a cash flow statement for you. But if you tend to just track stuff in an Excel sheet, you're probably not going to have a cash flow statement. Cash flow statement can be important, especially for larger businesses. Typically, I'd say when you get into $1 million plus of profitability, or for any business that has a significant amount of inventory or kind of fixed assets that sit on the balance sheet. And the reason being is for a small, simple business, maybe a content site, your traditional income statement is probably going to match exactly what your cash flow statement is going to be. But for something that has significant inventory, where you physically stock it, your income statement is not going to reflect what your cash flow statement does. And so you need to be really careful if you're going to buy a business that has a lot of inventory purchases that are necessary. Reason being is you can get to the end of a year and you say your profitability is $200,000, but the business is growing, and so it needs an additional $100,000 of inventory that needs to be purchased for the next couple months. And so you might, a buyer might look at the business and say, oh, this is going to put $200K of profit into my pocket this next year, when realistically it's going to do $200K of profit, but they're going to have to spend $100K of cash to buy more inventory for it. So your cash flow statement is not always equal to your income statement. And so it's important to have that if you have a kind of inventory heavy or asset heavy business where you're stocking a lot of inventory.
All right, guys. And so just to touch on what we covered here in this podcast, again, this was meant to be pretty brief. I know we gave a somewhat in-depth explanation on the income statement there. We really could do a whole series on how to actually put together an income statement. So unfortunately, we can't go into it that far. But again, just to reiterate, that income statement really is going to be the most important financial statement in terms of selling or successfully selling an online business. We've also got the balance sheet and the statement of cash flows, much less common, but as we discussed, we gave a few examples of where those may be necessary or where those may be beneficial or helpful to throw those in. Otherwise, we really can't stress the importance of financials enough. As Jake got into with the one story, that's not the only business we've worked with that just did not have proper financials, proper income statements, and it really makes it tough to get a deal done. So we really can't stress the importance of that enough. The longer of a history of those income statements you have, the better. If the business is 2 years old or older, really having at least those 2 years of income statements is excellent. Otherwise, if the business is newer, just get as much as you can. Make sure that's as detailed and as in-depth as possible. So again, just can't stress the importance of that enough.
And then one other thing to throw in is tax returns are huge too. If you do have tax returns for your business, that's awesome as well. We still need monthly financial statements, but those are awesome if you have them, and absolutely extremely helpful, especially since you're going to need tax returns for a buyer to utilize SBA financing. So going to go ahead and pass it over to Trey to go ahead and roll the outro here, but wanted to throw in one fun accounting finance question before we wrap this one up. So the question is, if you're analyzing a business and you get to pick 2 out of the 3 financial statements, which 2 would you pick? Maybe I'll just go ahead and answer my own question. The 2 that you want to pick is the income statement and the balance sheet, because if you have an income statement and a balance sheet, 2 periods of balance sheets, you can go ahead and construct a cash flow statement.
All right. So I think that about wraps up this episode. If you guys, the listeners or viewers, happen to have any questions, feel free to reach out to us directly to our email. That is dealteam@saleaway.co. Again, that is dealteam@saleaway.co. Also, we do want to say that we do provide a free, no obligation evaluation of your online business. So please feel free to reach out and we can give you a evaluation of your business. And if it is that time to sell, hit us up and we will get that on the market for you. We appreciate you guys for tuning in. This is available on Apple Podcasts, Spotify, Stitcher, and YouTube. And we would really appreciate it if you'd like the podcast. Hit that subscribe button or add our show to your favorites so you can be in the loop whenever we have more shows in the future. Roll the outro.